it's pretty clear today that the Reserve Bank of New Zealand is quite happy with their strategy to gradually withdraw stimulus. The New Zealand economy is strong, notwithstanding this current lockdown. But the underlying strength of the economy can't be ignored. We've got a very good, labour market. We've got capacity constraints that are really putting upward pressure on wages, broader inflation. So now's the time and the appropriate time for the central bank to start to gradually withdraw that really very accommodative stimulus that they introduced last year at the height of the pandemic.
And I suppose we're also seeing a lot of strength when it comes to housing prices as well. They've got a range of measures that's added to their remit now. They've got the LVR restrictions that they have put in, even more so coming through in November. We've got the hikes now. So do you think that this is going to finally put a cap on the house price growth that they have seen there? Because it's hurting a lot of people in terms of affordability as well, no?
I mean, that's a really good question. And we do know that housing affordability in New Zealand is a huge issue, particularly in places like Auckland. So the hope and the expectation is that these continued macroprudential tools will eventually start to have a sustained impact on affordability. But, they also need to address other issues. And this isn't so much a central bank concern, but a broader policy concern. Issues around supply, they need to be addressed as well and it needs to be a really holistic approach to combat the affordability issues around housing in New Zealand. It's not just a macroprudential tools via loan to value restrictions that are going to magically solve the problem overnight, because we've seen that that's not the case. It needs to be a more holistic approach from also from the government as well.
And taking that holistic approach, Katrina, good morning, Tanvi joining in this conversation. Do you think that the RBNZ would hike rates, but this would be a shallow rate hiking cycle than ones we've seen in the past?
I mean, it's hard to tell because, we're still dealing with COVID in New Zealand, and the near-term path, I would say, is still quite highly uncertain. I mean, it's not clear exactly how quickly the New Zealand economy is going to re-emerge from lockdown and how quickly the economic recovery is going to gather speed again. And so, we know, for example, Auckland, they've been in lockdown 7 weeks and they account for about 30% of the economy. And we know that Auckland is going to gradually emerge from lockdown. And so, it really depends on how quickly the economy is able to get back on its feet again and how quickly they're able to learn to live with COVID, because that's an important policy shift that they've just adopted. So those two factors mean that it's a highly uncertain path when it comes to policy normalisation in New Zealand, but it is clearly one that they're going to be normalising. It's just not clear on the speed with which they're going to be doing that.